Welcome to this press conference. Tervetuloa. Välkomna. I am Rickard Brander from the Bank of Finland Communications. The Bank of Finland is hosting this event where the head of the International Monetary Fund's mission to Finland, Mr. Alex Pienkowski, will present the IMF's concluding statement on the Finnish economy after their mission having visited Finland now for a couple of weeks. After Mr. Pienkowski's brief presentation, there is a possibility for journalists here and online to pose questions. And when posing questions, please state the name of yourself and of your media. Mr. Pienkowski, the floor is yours.
Thank you, Richard, and thank you all for joining us today. So we at the IMF have just completed our annual check-in of the Finnish economy, what we call the Article 4 consultation. And the full report should be available in mid to late January. You should have all seen a copy of the concluding statement, which summarizes our main conclusions from the visit. But I wanted to just make a few remarks here today to bring out some of the main messages from this press release. So over recent years, the Finnish economy has experienced several adverse shocks, including a hard landing last year, where there was a deep recession and inflation fell below 2%. The downturn now seems to have reached its trough, with 2 modest quarters of growth at the start of this year and stabilized house prices and some early positive signs in the construction sector. And while employment seems to have dipped in recent months, we think broadly that the labour market has been quite resilient over recent years. So looking ahead, we think growth will pick up to around 1.5% next year, and inflation, which has been below target, is going to converge to around 2% in the second half of next year. But we still think there are downside risks, especially from abroad. We think that risks include an escalation of tensions with Russia's invasion of Ukraine, also the risk of a trade war, or greater geoeconomic fragmentation. But on the domestic side, we see risks as much more balanced, and I think we see upside potential to growth from Finland's vibrant ITC tech sector, potential investment in innovation from the green transition, and also upside from the government's recent pro-growth reforms. In terms of fiscal policy, there's clearly been a marked deterioration since 2022. And part of this has obviously been driven by the economic downturn, but there's also been an increase in expenditure, albeit from areas which were hard to resist given external events. So the new fiscal measures which were announced in April were very welcome, and we expect this to have the biggest impact on the deficit next year. But we think more effort is needed, especially from 2026. Based on this, our recommendation is that the fiscal deficit closes by 2029, and this would put debt on a firm downward trajectory. On the financial sector, the resilience of the system has been impressive. Despite the hard economic landing and high interest rates, non-performing loans have remained contained, and capital and liquidity buffers remain well above regulatory levels. There remain significant systemic risks, including from high household debt and large and highly interconnected banks. But in regard to the latter, we very much welcome Finland's initiative to lead discussions with its neighbours in terms of undertaking a joint Nordic-Baltic banking sector stress test. Given these risks and recent strength in profits, we continue to advocate for stronger capital buffers. On structural issues, we support the government's reforms to social benefits and other measures to enhance employment. These will start to bear fruit when the economy really starts to grow and recover. Of course, employee skills and education are also critical, and efforts to improve university education and attract high-skilled talent are also welcome. Given the recent weak productivity growth, attention also needs to be given to reforms to the business environment. We don't have any type of silver bullet here, but we think attention needs to be given to the tax treatment of risk capital, and also some investigation into potential barriers to entry and excess regulation in the service sectors, which had notable weakness in productivity growth. But most importantly, we would like to call on the authorities to continue to championing the single market in the EU. So just to sum up, the economy has begun its recovery, but the strength of this bounce back remains unclear. And on fiscal policy, we strongly endorse the government's objectives to reduce the deficit, but we think that more is needed to achieve this in coming years. So let me stop here, and if we have any questions online or in the room, I'd be very happy to take them.
Thank you very much, Mr. Piankowski. I would like to add that we have at the Bank of Finland website published this concluding statement of yours, and it's also available through the IMF webpage, and there is also available a summary of the statement in the local languages, Finnish and Swedish, and it's also in English. And additionally, we have a press release from the Bank of Finland in Finnish, Swedish, English, where we a little bit go through the process. And if anyone online or here has questions concerning the process from a Finnish perspective, we have senior economist Anni Nording who will give you additional information. So we will wait a little bit for possible questions. We noticed last time you were here in January, we waited just a few seconds too short because then it started to come and we had already concluded. No questions online, and we only have the journalists here will have own interviews afterwards. So with this, if there are no questions, then we will conclude this part of the press conference and continue with a few bilateral meetings. Thank you, Mr. Piankowski. Thank you to the delegation from the IMF. This session closes here.
Thank you very much.